What's going on, everybody? It's TG here. Thought I'd brief you guys on AMC stock because the stock has been on absolute fire recently while the rest of the market has been going down. In the past month, this stock has rallied hard from the depths of $9 just a couple weeks ago to literally 55% since then. It's over $14 a share, with the average price target on the street being relatively low, around $4 a share. So obviously significantly higher than normal. But why is the stock going up so much? What is going on with it? Well, a couple reasons. First is the short squeeze. Everyone has been talking about the imminent short squeeze that's happening, just like what happened with GameStop. Remember how GameStop did? It absolutely jumped huge, as long as another analyst coming out with a $16 price target, which is one of the highest on the street as of right now. They've also done a lot of dilution, raising much more capital, $428 million to be exact. Also, there's the reopening trade. The economy is starting to reopen. The CDC said that you can go out, and not have to wear a mask anymore. That's big for places like AMC, where you're in a populated location. So, again, it's going to be interesting to see what's going to happen with this. But, as of right now, 59.5% of the population aged 18 and up have at least gotten one dose of the vaccine. So, this does look a lot better and bodes much more well for places like AMC. Some of these reopening stocks. AMC is a clear reopening stock, and I think it's going to definitely pick up business. I mean, there's no doubt about that. The question is, will it last? Some analysts don't believe so, and some analysts have a 1 cent price target on it. Analyst Richard Greenfield says they have a ton of leverage, and when I talk about leverage, I mean debt leverage. They are one of the most heavily leveraged stocks there is, with debt, 8 times leverage, which is a ton. So the interest that they're paying on that is just through the roof, and the end result is the company has an 8 times leverage with no free cash flow, and if attendance fails to rebound as we expect, it's going to be a big problem, not to mention declines long term as release windows shrink and consumer behavior evolves. So they're talking about things like Netflix, Disney Plus, the basically digitalization of streaming, streaming services like Netflix, Hulu, HBO, Disney Plus. A lot of these companies have really digitized and made it so that way the stay-at-home stocks, the stay-at-home economy, the stay-at-home entertainment is just booming because of it. And people get a taste of comfort, and they like comfort, and they want to stay with comfort. And that's exactly what we're seeing here right now. So while AMC stock has absolutely rallied hard, just in a couple days from May 6th to May 18th, we're just seeing an incredible movement. So a lot of people are thinking short squeeze, but mainly it's fueled by the retail investors such as Wall Street Bets. But it's going to be really interesting to see if it can compete. The issue with this is, like I said, the competition from other streaming services, and if movie theaters are going to be as popular as they once were. I don't think they are going to be as popular as they once were. I think the fact that people are paying so much for these streaming services and the comfort you get from staying at home, obviously there's going to be people that still go. Everyone wants to go see the new movies, but they make it so easy to order a movie that's just came out and to watch it at home, with a nice cooked meal and not have to pay a fortune. Because movie theaters are expensive, and they're raising their prices as well to compensate for the lack of attendance. And that's going to be a big issue. You go to a movie theater, popcorn's like $11. I'm not trying to spend $11 on popcorn. I'd rather order food. Rather get a $7 Domino large pizza. That's just me. And I think a lot of people are the same way. Also, they like to have it delivered to them. Stuff like Uber Eats and Grubhub and all that stuff like that. So I don't know. It's going to be very interesting to see. I don't think you can make an assumption yet, but based on macroeconomic trends that we've seen, and even microeconomic trends of the way consumer behavior has been, there's a clear shift towards things like streaming at home and comfort, and that's the big case for Zoom. That's why Zoom is still a big company. I mean, if you look at Zoom's still a $92 billion company, and one of the reasons for that is people aren't just going to go back to exactly how they were. Okay, you got to realize when things happen. It's like Amazon Prime and malls. People aren't going back to malls like people thought they were when, the people thought it was going to die down. It's not. Amazon's last couple quarters have showed that. And that's why Amazon continues to grow as a company, because comfort is key. Convenience is key. And those are what those companies excel in. And, the question is, will AMC, with their insane amount of debt, be able to compete with people like that? And including Amazon. Amazon's looking to buy out MGM Media right now for $9 billion. So again, making their content library significantly higher. So I think this is going to be huge competition for AMC. Amazon's not buying out AMC. They're buying out MGM potentially. And so that whole buyout for AMC is now done. So it's going to be very, very interesting to see if this stock can keep up what it has been. I personally don't think it will. I think it's in the end, a dying stock. It's on its last breath, and this stock has absolutely roared from its lows in January now. 585%, and I just think their debt has become too much. Debt's a huge issue, and I think the debt has just simply become too much for them to handle. So that's my thoughts. That's my prediction on what is going to go down with AMC. But obviously in the short term, you can make some good money. The stock, even with that short squeeze, is still down a little bit, but it went up an incredible amount in a very, very short time. But yeah, I don't know. We'll have to see what happens. But I think the Wall Street bets can only take it so far, and then when hype dies, we saw what happened with GME as well. It crashed from where it was. It was $500 at one point, and it's crashed over 50% since then. So again, we'll have to see what happens. But this analyst believes it's going to 1 cent, and the debt's just too much. The debt is simply too much for them to handle, and we'll just have to see what happens. But anyways, guys, hope you guys are having a great day. Hope you guys are doing good. I'm heading back to New York in a couple days. My tennis season has come to an end. We lost at the national championship, which is sad, but it's one of those things that happened. And very sad moment. But we move on, and just like with stock losses, you move on and you regroup and you focus on what's next. So, anyways, guys, that's what I'm going to be doing. But hope you guys are having a great day. But let me know your thoughts on AMC. Let me know your thoughts on this whole switch and digitalization of society and the way we do things, because it's extremely interesting at the end of the day. So we'll look closely to see what happens with them. But currently AMC stock up a ton right now, and will it continue? That's the big question. So right now it's sitting at $14.06 with a 52-week low of 191 and a 52-week high of 2036. So it's gonna be very interesting to see where the stock goes. But yeah, let me know your guys' thoughts on it. Have a wonderful day, and I will talk to you guys in the next video. Bye, guys.